Okay, let's unpack this. Today, we're diving deep into the recent Q1 results of ITC Hotels. Our mission is to really distill the most important nuggets of knowledge from these comprehensive reports, giving you a clear, concise picture of their performance and, their strategic direction.
Absolutely. And what's truly fascinating here is how these results don't just show the financial wins, they also really reveal the strategic thinking behind that growth. It gives us some great insights into the wider hospitality sector, too.
Yeah, connecting those dots. So let's kick things off right at the top. Based on the recent Q1 results of ITC Hotels, their overall financial performance for Q1 FY26, what's the headline story?
The clear message: record-breaking success. Seriously. ITC Hotels hit its highest ever first quarter revenue and profits. And this isn't just, a small step up. It feels like a significant acceleration. It seems driven by, strong demand, definitely, but also smart expansion and being efficient operationally. They've clearly focused on luxury, sustainability, and this asset right approach they keep mentioning.
Asset right. Okay, we'll circle back to that. But the numbers first. Give us the highlights.
Right. So if we look at standalone figures, revenue from operations up 14% to 744 crore rupees. Total revenue jumped 20% to 783 crore. But here's the kicker. The profit after tax, the PAT. That shot up a massive 47% to 150 crore rupees.
Wow, 47%.
Yeah, that kind of bottom line jump is really something. And Consolidated, it's a similar story, maybe even stronger in parts. Revenue from ops up 16% to 816 crore. Total revenue climbed 20% to 860 crore. And that Consolidated PAT up a huge 53% to 134 crore rupees.
53%.
Exactly. And you see their EBITDA margins expanding too, both standalone and consolidated. It really points to effective cost control and better operating leverage.
Okay, those 47% and 53% PAT jumps are genuinely massive, unheard of for a company this size. Were there any sort of one-off things boosting that, or is this really down to sustainable operational improvements?
It feels like a mix, but I'd lean towards mostly sustainable. Operationally, look at their domestic-owned hotels. Occupancy improved by about 300 basis points.
3 percentage points.
Right, 3 points. Reaching a pretty solid 73% in Q1. And their average room rates, ARRs, they grew by about 9%. And revenue per available room, RevPAR, that grew about 13%.
Okay, so filling more rooms and getting better prices.
Precisely. Strong demand, good pricing power. Now, we should probably mention Q1 last year, FY25, that was a bit of a low base, partly because of the Lok Sabha elections, so that makes this year's Q1 jump look particularly strong year over year, but still the underlying trend is very positive.
Got it. So a bit of context, but the core performance is strong. Now, those numbers are undeniably impressive, but what really gets me interested is how they're doing it. Beyond the spreadsheet, looking at the recent Q1 results of ITC Hotels, what are the key business strategies really driving this?
Yeah, let's dive into that. When you look closer, you see a very clear focus on, diversifying where the money comes from and expanding strategically. For instance, room revenues, strong growth there, 16% on a comparable basis. But a key driver was their MIC segment, meetings, incentives, conferences, exhibitions, plus weddings.
Yeah. MIC and weddings, always important.
Huge. And they actually benefited from more auspicious dates in Q1 this year compared to last. So the contribution from MIC and weddings went up slightly from 19% to 20% for their domestic-owned hotels. And food and beverages, another strong area. Revenue up 13%, mostly driven by banqueting and outdoor catering doing well. And quite significantly, their signature F&B brand, Avartana, it actually launched internationally in France. That's a big step.
Avartana in France. Interesting. Okay, what else stands out strategically?
Well, linking back to the numbers, their pricing power and those occupancy gains are really clear. Average daily rate, ADR, up 9%. That shows they can command premium prices. Occupancy up by 275 basis points, so nearly 3%, showing good demand, and they're using their rooms efficiently. And RevPAR up 13%. But here's a really telling stat. ITC Hotels achieved a RevPAR premium of 34% over the industry average.
34% premium compared to competitors.
Exactly. In the luxury, upper upscale, and upscale segments. It means they're not just growing with the market, they're significantly outperforming their peers. Particularly strong outperformance in places like Hyderabad, Agra, and Ahmedabad, apparently.
That 34% premium really says a lot about their brand strength and positioning.
Yeah.
Okay, what about expansion? How are they actually growing their footprint?
Right. This brings us nicely to their strategic expansion in this asset-right model we mentioned earlier. First off, milestone. ITC Hotels crossed the 200 hotel mark overall. That includes 143 operational hotels and a pipeline of 58 more. Their goal is ambitious: 220 operational hotels, over 20,000 keys by 2030.
So they're adding quite a few hotels.
They are. In Q1 FY26 alone, they signed 8 new hotels. That adds about 700 keys in strategic spots like Bodh Gaya, Dehradun, Goa, Lucknow, and others. Now, about that asset-right strategy, it's pretty smart.
Explain that a bit more. What does asset-right actually mean in practice?
Think of it like this. Instead of ITC having to build and own every single new hotel themselves, which costs a huge amount of capital, they partner with property owners. ITC brings the brand, the management expertise, the operating systems, everything that makes it an ITC hotel. The partner often handles the physical building and the major investment.
So it's like franchising, but maybe more involved, like management contracts.
Exactly, primarily management contracts. It lets ITC expand much faster and into more places, especially Tier 2 and 3 cities, without tying up billions in their own capital. The reports say about 90% of their planned new rooms are coming via this management contract route. That's incredibly capital efficient.
90%, that's a very clear strategy.
It is. And they're not just focused domestically. Their new hotel in Colombo, ITC Ratnadipa, launched in April 2024. It's apparently scaled up fast and already achieved market leadership there.
Impressive international start, too.
Yeah. And the goal is to get managed properties up to 70% of their portfolio, from about 58% now. They're targeting a 2.5 times growth in management fees by 2030. Though they are still investing in some owned assets, too, with projects in Puri, Vizag, and expanding in Bhubaneswar.
Okay, so it sounds like they're not just growing, but growing very smartly, leveraging their brand without massive capital outlay for every property. Now, shifting gears slightly, something that often comes up with ITC is sustainability. Based on the recent Q1 results of ITC Hotels, this seems like more than just a buzzword for them, isn't it?
Oh, absolutely. Their leadership in sustainable hospitality is a huge differentiator, and they have the certifications to back it up. They hold the most ILI Platinum certifications globally, 23 of their hotels.
23, that's a lot.
It is. But even more striking, 12 ITC hotels are certified ILI D0 carbon. They were literally the first 12 hotels in the world to achieve that. And similarly, 9 ITC hotels are certified ILI D0 water, again, the first 9 hotels globally. ITC Grand Farat got its zero water certification just this quarter, Q1 FY26.
Zero carbon and zero water. That's beyond just efficiency. That's aiming for neutrality.
Exactly. And what's maybe even more significant from a climate perspective, they've actually surpassed their 2030 greenhouse gas emission targets already, the ones set under COP21.
Wow. Ahead of schedule on climate goals.
Yeah. And this commitment, it's not just, good PR or good for the planet. It aligns with what more and more travelers want: responsible options. Plus, frankly, it can lead to real operational cost savings in the long run, too. Energy and water aren't cheap.
That's a really commendable achievement, especially in hospitality, which is pretty resource intensive. So let's step back again. When we look at the bigger picture, how do all these individual successes, the financials, the strategy, the sustainability, how does it all fit into the wider industry context? What's the outlook based on the recent Q1 results of ITC Hotels?
Well, the timing looks good for them. The reports highlight that India's economy is projected to be the fastest growing large economy in FY26. That provides a really strong foundation.
A rising tide lifts all boats, potentially.
To an extent, yes. You've got robust domestic demand, increasing urbanization, good demographics, a strong services sector, all positive for hospitality. The Indian hospitality sector itself is clearly bouncing back strongly post-pandemic. Demand for rooms is expected to actually outgrow supply in the coming years.
Demand outgrowing supply. That sounds good for hotel operators.
It generally is, yes. It supports pricing power. And government initiatives are helping 2 big investments in infrastructure, better connectivity, tourism promotion. So demand from domestic travelers, international tourists picking up, more air travel, corporate travel returning. These are all key drivers. The outlook suggests demand will stay ahead of supply in the medium term, which should keep prices firm. And one more point on ITC specifically. About a quarter of their current rooms are in hotels less than 5 years old. These newer hotels are often still ramping up, maybe operating below 70% occupancy. So there's scope just to improve performance within their existing assets, hinting at more upside.
Okay, so a favorable macro environment and some internal runway for growth too. Looking ahead then, what's their game plan? Based on the recent Q1 results of ITC Hotels, what are the main pillars of their strategy moving forward?
They seem to have several clear strategic enablers lined up. A big one is continuing to enhance their brand equity. That means ongoing investment in the brand perception, improving rooms, F&B, quality, efficiency, staying competitive, and even finding new revenue streams.
Makes sense. Keep polishing the brand.
Right. Then there's accelerating that asset-right growth we talked about, really pushing the expansion through management contracts and partnerships. That 2.5x growth target for management fees by FY30 is key there. They're also emphasizing a digital-first approach, using tech to improve the guest experience and automate operations behind the scenes.
Digital is crucial everywhere now.
Absolutely. Plus a strong focus on people attracting and keeping talent, being an employer of choice, and of course, continuing to lead on sustainability. And finally, just execution. They have this big pipeline, 58 hotels, over 5,300 keys. A lot of those are brownfield, meaning conversions or existing properties being rebranded, which can be faster. They're apparently aiming to open more than one hotel per month on average for the next 2 years.
One hotel a month. That's an aggressive pace.
It is. It shows real ambition in executing that pipeline.
So an aggressive, but as you said, seemingly well-supported growth plan. Now, based on the recent Q1 results of ITC Hotels, it's probably helpful for listeners to understand the range of hotels they actually operate. How diverse is their brand portfolio? I mean, touch on the financial projections again.
Sure. Their brand structure is quite layered, covering different market segments. You've got 6 main brands. There's the flagship ITC Hotels brand itself, pure luxury. Then Mementos, which is more luxury lifestyle. Welcome Hotel sits in the upper upscale segment. Story offers boutique premium experiences. Fortune covers the mid-market to upscale segments, quite a large brand for them. And Welcome Heritage focuses on leisure and, well, heritage properties.
Okay, so a brand for pretty much every key segment.
Pretty much. It allows them to capture different types of demand, different price points. Overall, as we said, 143 operational hotels, over 13,000 keys now, plus that pipeline of 58 hotels and over 5,300 keys. That brings the total portfolio operational plus pipeline to 201 hotels and nearly 19,000 keys.
That's a significant scale. And the financial forecasts, what do the estimates look like?
Right, and these are just estimates, of course. But for FY24, they reported revenues around 34 crore rupees. Looking ahead, projections suggest revenues heading roughly 360 crore in FY25, then maybe 54 crore in FY26, and potentially 540 crore by FY27. And alongside that revenue growth, the projections show EBITDA margins generally expanding slightly year on year, suggesting continued efficiency gains.
Consistent growth and margin improvement projected. Okay, so finally, let's wrap this part up. Based on the recent Q1 results of ITC Hotels, what does all this mean for their current market status? How are they viewed now?
Well, these results really cement their position as a quality listed player in the Indian hotel industry. You have strong brand heritage, obviously, experienced management, and a very healthy balance sheet. Now, valuation-wise, the reports note it's significant. At the current market price mentioned in the reports, it was trading at an EBITDA multiple of around 29.7 times the projected FY27 earnings.
How does that compare to, say, their peers?
Interestingly, the analysis suggests ITC Hotels' valuation is industry-leading, maybe even at a slight, 5%, premium to its big competitor, Indian Hotels Company. And the stock performance itself reflects this strong view. Since listing separately in January 2025, the stock apparently saw a really steep run-up, gaining about 40%.
40% since listing. That's quick.
Very quick. It made it the best-performing hotel stock in that period, according to the reports. So the takeaway seems to be, given those high valuations and the sharp price rise, there's clear recognition of its long-term potential, but maybe some caution for the immediate short term after such a run-up. One last point. Their balance sheet is strong. They had about 1,800 crore rupees in cash as of March 2025. And they're expected to generate pretty strong cash flows from operations, maybe around 2,500 crore over the next couple of years. That gives them a lot of flexibility.
Wow, okay. That was a truly comprehensive deep dive into the recent Q1 results of ITC Hotels. It's really fascinating to see how they're managing both that strong financial performance and the strategic growth in what's clearly a dynamic market.
It really is. And it makes you think, doesn't it? It raises an important question, maybe for you, the listener. As this whole hospitality sector keeps evolving, changing travel habits, that increasing focus on sustainability, we discussed what other operational tweaks or tech innovations might really set hotel chains apart in the next few years. What's the next big differentiator?
That's a great thought to mull over. What is next? And before we wrap up this deep dive completely, we absolutely need to make this clear. We are not SEBI-registered financial advisors. This discussion is purely for informational purposes based on recent reports. If you are considering making any investment decisions at all, please please consult a certified financial advisor who understands your personal situation.